They feel poor. They feel tight in a way because they've seen all this paper wealth evaporate. They've seen that number they had in their head of what their portfolio was worth, cut it by 20 or 30%.
This sounds eerily similar to you. But go on.
Oh, you should have let me keep going. It just gets more and more like me, right?
They've seen this paper wealth evaporate. That was from the heart, dude. That was from the heart. Welcome back to another pod. We're wrapping up 2023 today, and we're going to be talking about all things venture capital, both what happened this year and looking toward 2024.
Okay, let's talk venture. I mean, it was a terrible year for most miners. The majority of the exchange got hit pretty hard, pretty dry out there. Liquidity's drying up. You know, I saw total financings only came in about 250 million for November. I think that's maybe the second or third lowest month of all time. And a lot of these smaller outfits, I mean, they can shut it down. They can make $1 million last for a year or two. You know, they can fire everybody, not take salaries, and keep the lights on.
These venture companies, yeah, they can not take salaries, you know, stall the engines and just be a company and survive on $1 million probably for 2-3 years. But that defeats the entire purpose of going public. You know, when you go down to the States and you introduce investors or brokers or bankers or whoever to some of the early stage companies that we happen to take public frequently in Canada, they're like, well, why is this company going public? Well, why? It's so soon. It's too early. Why are you public? What they don't understand is that the venture ecosystem, it's brilliant. It's uniquely Canadian in that it allows retail investors to participate in the venture capital world. And it's a huge opportunity for retail investors. Tons of risks, of course, because these are startups. But in what other country on the planet do you have such widespread participation in ventures? This is a unique ecosystem that we've created. But the ecosystem doesn't work well unless you're shooting for the stars. These are ventures, right? So the agenda should never be self-preservation. Sure, there's periods where you have to cut costs. You should always be swinging for the fences. Otherwise, you're missing the point of being public. Just being a public company in Canada on the venture, you know, minimum run is probably $250,000-300,000 a year. Filing fees, regulatory, accounting, and so forth. Mm-hmm. So you're going to burn through that anyway. The burn rate is high. Investors are in a sinking ship if progress isn't made. So these companies can't just sit idly. And one of the barometers that I kind of use just to gauge the CEO's level of enthusiasm is show me an annual shareholder letter around this time of year. The CEOs who sit down with a cup of coffee for 3-4 hours and write a shareholder letter, those are the guys I want to be paying attention to because they give a damn. They don't have their heads in the sand. They're not scared. They have a plan moving forward and they have stuff to talk about from this year when most companies, you know, a lot of companies weren't doing much. So anyway, that's just a little anecdotal thing I like to look at. But if you're going to be public in Canada in this great ecosystem that's been created with the venture, swing for the fences. Otherwise, why are you public?
Well said. I mean, that's the reason. I mean, a lot of these guys go public hoping that they're just going to raise capital and be able to advance their project further. And of course, that's you know, the point behind it. I think
the point is to think about the shareholder first. That's their boss. The shareholder first. Shareholders know this is a casino. When you come to the venture, it's for calculated gambles. They're looking for moonshots, big ideas with management teams that can make an attempt to execute on development plans as scripted.
The Canadian investor is tired. They are beaten down. They got annihilated in the crypto bubble, absolutely laid out. They got destroyed in the cannabis space. Okay. So the liquidity and the trading levels just have not come back. What we're seeing now is much more robust markets in Australia. They didn't have the cannabis blow up. They didn't get as carried away in the crypto stuff. But no, the cannabis, they skipped over that. A clear sign to me that the Canadian markets are hurting is that for the first time in many years, Americans now are making up more of our venture capital markets. They're investing more. I think it's about 44% of the entire market is coming from US-based investors. And historically, that's not been the case. So that's a telltale sign that the Canadian investor is hurting. I've got some other data on pre-seed and seed investments that suggest otherwise. I'll bring that into the fold after. But you know, the average Canadian, whether it's retail, institutional, they've taken some heavy losses over the last 24 months. And, they're licking their wounds right now.
Well, you can tie that directly into discretionary spending. Just compare discretionary spending in the US to that of Canada's. The Canadian consumer's discretionary spending is flatlined in 2023. In the US, it's around 4%. When you invest in small and micro cap stocks, this is discretionary risk-taking money, and Canadians don't have any. So I think one of the things to look to, I put a big onus on CEOs of these publicly traded companies. Like I really evaluate them, some with anecdotal stuff, some with like real measurable data points. But bottom line is this: the companies on the venture that are going to thrive, I believe, in 2024, have stories that they're going after big goals. Meaning, if all works out, their market cap is going to have a B in it. And the only way they're going to be able to find the capital to take those big shots, those big risks, is internationally and mainly going into the US. So if you have a CEO who doesn't have a Rolodex of US brokers and bankers, that company's in trouble. The CEO's number one role is to be the lead evangelist. He's the number one salesman and promoter of the company. If he or she does not have a deep network in the capital markets in America, they're just going to keep going around to the same brokers and bankers in Canada, which is a very, very, very small sandbox now of ones that can actually execute on significant financings. And it's just played out. They're tired. They see the same
and even
stories.
Those
they barely
guys,
listen.
Those brokers don't want to hear that you're not going into the U.S. They're only going to give you money if you've got a plan to get into the U.S. market. Right?
Exactly.
So I think every public company needs to have that strategy. Funding to Canadian startups declined by 57% to $808 million in Q3 of 2023. It's down 84% from the record fundraising quarter of Q2 2021. That's when startups collectively raised $5.12 billion.
Well, look at the volume compared to Q1, Q2 2021. Look at the volume. All year on the composite, the TSX Venture Composite, the volume was around 25 million maybe. I mean, that tells you everything you need to know. We were trading over 100 million a day in Q1 2021.
This is the reality. The Canadian market is completely shifting. Mining is getting left behind. Kim Furlong, the CEO of the Canadian Venture Capital Association, believes we are witnessing a return to normalcy, mirroring the pre-pandemic era of 2019. So in a breakdown of venture capital stages, pre-seed funding received $95 million from 85 deals in 2023 so far. Now, that's close to the record achieved in 2022. That's pre-seed. That's very early stage. I think a lot of investors are figuring out there has to be this X factor to get them off the bench into the game. And if they feel like, wow, this is pre-seed, pre-IPO, it's kind of like the mindset of guys buying
being early.
Being early. It's being early. It's something to hold on to, right? It's something.
Like I am early here, and if this works, I'm going to get a mega lift because I'm so early.
Let's just look at the first 3 quarters of 2023, okay? This is venture capital, all right? Information and communications technology is dominating the Canadian landscape, okay? $3.1 billion invested over 237 deals in the first 9 months of the year. That's 58% of all venture capital financing in Canada right now going to the tech space. This is where it gets interesting. Life sciences comes in second with 986 million, almost $1 billion.
I'm not surprised.
Okay, from almost 120 deals. Now that sector is poised to outperform 2022. In third and fourth place, you've got clean tech and agribusiness. Clean tech came in for 800 mil across 55 deals. Agribusiness did almost $250 million, 232 million, which is a record for agribusiness.
Consequence
can you
of
see the trend?
Like,
where's mining? Where's the industrial? Where's the manufacturing? Manufacturing and industry 5 years ago, 2017, 2018, they dominated tech.
I'm encouraged by it. I like to see more tech. I like to see more life sciences. And the deals that we're looking at right now that are private, a lot of them are in the life sciences sector or medical device sector and things like this. And I'm still encouraged by the metal sector because everything that's being built out there nowadays, whether it's new manufacturing supply chain facilities or new technologies or, new vehicles, EVs and so forth. All this stuff requires minerals. Metals companies will get a lift when the economy picks up steam. So all these things help the economy and the metals will just come up the rear for a nice, easy layup. So I'm still very bullish on metals 2024. I think we're in a super cycle for several different metals right now.
You were speaking, to Cameco in your portfolio, its performance, right, over the last year. It's one of your biggest gainers, right? First Quantum Minerals got its ass kicked in 2023. That was one of Canada's shining stars, one of the largest mining companies in Canada. Share price, the Panama fiasco, we did a number of shorts about it. We've written about it and spoken about it before. Guys can check that out below. We'll put some links below. But, that did something to the Canadian psyche abroad. It's almost like Panama kind of let the world know that, Canadians can be pushed around abroad. We don't have a lot to lean back on as it relates to like our geopolitical sway over these countries. They can tell Canada pound sand and the consequences are negligible, right? Whereas if that was a U.S. company in Panama and it was going to do big numbers, they might think twice about it. But I don't know.
You're right. America's is an exception, but yeah, you're right.
That was, we saw over approximately 10 billion, $8 to $10 billion in market cap wiped off the face of one of Canada's biggest and best mining companies.
It's another Fruta del Norte.
It is. Yeah.
And
complete disaster. Yeah. Which was Kinross, which was another Canadian company who got lit up abroad.
Yeah.
So this resource nationalism is real.
It's real, but that should increase the attractiveness of domestic deposits. We have $34 trillion proven of minerals in our ground, of natural resources in our ground that haven't been extracted yet. 34 trillion. I mean, that's an insane amount, and there's probably double that.
You can probably 2 or 3x that. Exactly. Easily.
That haven't been discovered yet. Canada is mineral rich. We have a very predictive political system, and yet it's attractive or romantic for a lot of Canadian miners to go abroad and, find these big deposits in these foreign lands that aren't necessarily friendly to foreign miners and don't give a damn about the investors. With Panama, for example, I mean, I saw both the shorts that you put up, and some of the comments is like, I think a lot of people from Panama are commenting and basically saying, screw the Canadian company, get the hell out. Not knowing the damage that does to foreign investors to the country of Panama. The risk the perceived risk of investing in Panama now, especially in the commodity market, is as high as any other country on the planet. Put it up there with the DRC in my mind.
Yeah.
Maybe worse.
Canadians are wildcatters, right? We've used to sort of like going out into the unknown, discovering things in our own country. So it sort of only makes sense that we would take that expertise and go abroad. I always love to say Canadians are the best in the world at 3 things: hockey, curling, and mining. But, those days of going to different parts of South America, to Africa, I don't want to say that they're over or they're coming to an end, but man, they're getting riskier, and you better be dialed in with the government like never before, or you are, you're just asking for trouble.
This is more American related, but at the end of Q3, never in the history of the Russell 2000 had valuations been as cheap as they were compared to their large cap counterparts on a PE basis. Never in the history, in like 50 years.
See, that shows you the psyche, right?
Bingo.
The risk off mentality.
But check this out. So that was at the end of Q3. Q4 starts. We start hearing grumblings about, maybe we will do rate cuts from Powell. What does the Russell do between November 16th and December 16th? It jammed 10, 11, 12%. Just like that. Remember, when these small and microcap markets move, bulk of the gains are made in the first 120 days.
Yeah.
So you have to be positioned. Now, do your own due diligence. This is an investment advice. But if you're looking at microcap stocks and you believe that they are going to lower interest rates, you want to be positioned before that happens, because the gains come, bulk of the gains, 60 to 70% of the gains usually come in a quarter or two.
We wrote a few pieces about this, and you can talk about inflation, the economy, unemployment, all these other metrics, poverty rate that the Fed is looking at. But the most important metric, I believe, is the amount the U.S. government is being forced to pay in interest month after month. On an annualized rate, it's gone through $1 trillion a year, and it's heading to $2 trillion. If they were to leave interest rates at 5 to 5.25%, 5.5%, the interest the U.S. would pay on its debt within a couple of years would exceed $2 trillion. They cannot allow that to happen. They have to lower rates. If you look at that chart in terms of interest the Fed is paying, that the U.S. government is paying on its debt, the Treasury, it's like a hockey stick going straight up. With interest rates at 0, they're paying $200 and $250 billion. As it goes like this, It's already above $1 trillion annualized, and it's headed to $2 trillion. It's going straight to the sky. They have about 6 months to begin some serious rate cuts, or they're going to have a massive problem. Their budget deficits, if you think $2 trillion, which again, we've said over and over again, the Congressional Budget Office is a bipartisan institution, and they have said the U.S. government will average $2 trillion in deficits every year from 2023 to 2034, okay, for the next 10 years. Sorry, from 2024 to 2033 for the next 10 years. They have a gun to their head. They have to lower interest rates in 2024, or the interest is going to get away from them. There'll be a run on the dollar. I think the Fed will make its first interest rate cut in the second quarter and continue cutting rates all the way through up until the election. I don't think they care if they think it's political or not. I think Biden...
I agree with the second quarter.
Biden will just do a victory lap. He'll just say, oh, no, they're just cutting rates because the economy's so great. I got inflation under control. Everything's going to be great again. Interest rates are going back down.
2024 is going to be crazy. U.S. elections.
The news cycle is going to be... insane.
But typically an election year is pretty decent for the markets. And combine an election year with a year of probably lowering interest rates, it gives you reason to make a bullish case for equities. Mm-hmm. And because small and micro caps have been so forgotten for essentially almost 2 years now, there's a case that they can do well. Shifting back to the venture, just because it's very seasonal, we're approaching the most bullish day to buy the TSX Venture Index. I know I say this every year, but this stat is like, you can't beat this stat.
Can't beat it.
So it's like 19 of the last 20 years or 21 years, basically since the venture's inception. Had you bought the TSX Venture Composite on December 21st to 22nd, give or take a day, you would have been able to sell within the following 60-day period for an average gain around 13%. Some of the time, like 4 or 5 years, you would have been able to sell for that type of an average gain in the first, second, or third week of January. Venture stocks are they fall victim so badly during tax loss selling season. People will chuck a venture stock out of their portfolio on a whim because they're pissed off at the CEO or for whatever reason. They won't think about any upside. They're just like, screw this garbage stock, and they get rid of it for nothing.
It was an emotional buy, and it's going to be an emotional sell oftentimes, right?
Well said. We're coming to a key date to keep in mind for investors. TSX Venture Composite Index, it usually gets a nice rally following December 21st, 22nd within a 60-day period that can produce pretty juicy returns. Last year was great. You look at the high of the venture, it basically hit during that 60-day period or shortly thereafter and spent the rest of the year doing this.
It's hard. You can't buy the index, okay? It's not an ETF. You got to look at some of the top performers. Look at some of the companies that are cashed up, that have, great resources, great assets, awesome management teams, that are putting out constant news, that are doing things that have kind of seen a little bit of a drop off, that have seen a 20-30% decline in the last 60 days. You want to swoop in on those ones. And we've done that in the past, and we've made good money doing it. It might take you 3-4 hours to sift through and find some gems. But you spread it out, right? You buy 5 or 10 names that you like.
Yeah. And go through their financials. It doesn't take that long. cedarplus.ca. See how much cash they have in the bank.
It's amazing the psychology behind it, right? Like, you can be in the middle of December and it's dark and you're kind of looking back at the year and you're just thinking like, why did I do this? Why did I do that? And then you kind of forget about the markets. You go into Christmas, you have this beautiful time with your friends and family. And then sort of January comes, people are almost compelled or forced to be optimistic, looking forward. So hope just kind of pours in. And all of a sudden, you know what? Yeah, I want exposure to this name and that name and this sector. And they're out there buying, whereas 20 days prior, it was the furthest thing from their mind. It's
so true.
It's incredible.
You know what's funny? What's funny? What's the shortest day of the year?
December 21st.
What's the best day to buy TSX Venture stocks?
December 21st.
December 21st, 22nd. Dude, I'm telling you right now, like,
hold on,
you
what
wake
happens
up,
on the longest day of the year, June 21st? The
the
markets are about to crater. They're going into, you're going into...
There you go. Going into summer, people aren't really coherent. They're drinking too much. Who knows? There's a lot of truth to that. Like, think about yourself. Like, I don't know, me, I wake up, it's dark. I come home from the office, it's dark.
Yeah.
I'm not feeling too rosy, in these dark winter days. But then Christmas comes around, you're with your family. Oh, looking to 2024. What are my resolutions? Everything's optimistic again, and people want to get things done. And particularly in the metal space, in the venture world, they want to get things done before PDAC, right? Which is early March.
I think the U.S. is going to sort of drag Canada kicking and screaming into a new bull market. If you look at some of the activity, I was watching the All In podcast, a few weeks ago, and they were showing a definite bottoming in capital, whether it's private equity, venture funding, it's bottomed. There's growth there now. So we're kind of getting back into the positive territory. We'd seen about a year and a half, 2 years of declining. I think the peak was 7% in 21 or something, and it kind of been going down. And now we're seeing about a 2% pop. I did some digging just even in Canada, okay? Private equity in Q3 2023 witnessed a resurgence, 2.2 billion invested across 158 deals. That's a 33% increase from Q2 2023. So this hasn't worked its way into the public markets yet, but we're seeing activity pick up in private equity, which tells me 24 could be a much better year.
The conversations that I'm having today compared to in August, September are night and day. Yeah. So all these deal maker guys, these finance guys with deep pockets who are constantly trying to put deals together or fund deals or start new businesses that inevitably have the ambition to go public. All of these guys are working like dogs right now, quietly planting seeds, working hard. They have long-term visions again, which is so refreshing because during the booms, it's like, you talk to, a financier that has a good reputation, or you talk to a deal guy that has a good reputation. What are you working on? He's got 10 different things. He can barely, talk straight. He's jumping on a plane. I gotta go, like jumping from one deal to the next. And that's not really
healthy.
Showing him, it's not healthy, and it doesn't show him or her in the best light. That actually is reputation damaging, in my opinion, because then it's like, oh, you're just a guy who throws mud at a wall. But now these men and women are focused, and the conversation is always it's basically I'm focused on this one thing right now, and their plan to go public is like 18 months from now or 12 months from now. They have long-term vision again. They're really, really working with the technical teams. They're getting, rolling up their sleeves and really understanding what they're getting involved with. That pumps me up. They got out of their cottages in, Muskoka or their places in Whistler, and they're back in the office working with the entrepreneurs again. I haven't seen it like that in probably 5-6 years. There's a guy I know, he's probably worth, maybe $50 million. Young guy, he's done well in several different deals. And, I asked him, what are you up to these days? We just had a conversation last week. And he said, I've been spending all my time building this company that he's now CEO of and calling funds in the US to build my network out there. You can raise money in Canada and you can use third-party outfits to help with that. But the fees you're going to pay, money is so expensive in this country right now. Yeah. So this is a guy who doesn't need more money. He's building a company that he strongly believes in, and he's preparing for their Series A by already calling funds in the US so he can set up these meetings when it's time to go raise capital. That's the type of energy I like to see. That makes me believe that 2024 will have some moonshots that hit, and I'm excited about it. It's not going to be without volatility and stress, but I am excited. More so, much more so, and you can watch our pods from 2022. I'm way more bullish about 2024 than I was 2023. I love the AI industry. I think they're doing some amazing stuff. And I'm not just saying like which company is going to create the next ChatGPT. I'm saying what spin-off products are companies and startups going to create from language models and so forth, right? Like that is super exciting. And that's a sphere that venture companies should be in. These moonshot ideas that could change industries that, if successful, deserve a B on their market cap. Uranium excites me. I'm a shareholder of Chemical, but I'm speaking more to the explorers. Yeah, COP28 really opened the door for nuclear energy. They want to, it's 21 or 22 countries want to triple their nuclear energy by 2050, based on, I think, 2020 levels. And Canada was one of them. Most of the G8 or the G7 countries were in that agreement. So super bullish on uranium. I'm bullish on gold, silver as well.
I'm bullish on critical minerals. I think the Liberals have done a good job of supporting the mining space in that sector. I think lithium has a rebound in 2024. I think it comes back with a vengeance. I think the price got oversold. I think demand is still going to be robust. Despite all the different setbacks, there's still so much demand for EVs and places for these batteries in our society as it continues to grow and electrify. So I think lithium catches a bid in 24, and I think gold. I think the only way the only way to get the consumer, the voter in 2024 feeling alive, feeling like a winner again, is for the US dollar to take a bit of a backseat, for it to get sort of knocked off its perch. It's around 102 right now, 102, 103. I think if the US dollar can fall down to the low 90s, you're going to see gold and silver rip. That is going to recapitalize the space like we haven't seen in years, because let's be serious, gold's at 2050 right now. It's above 2000. Nobody cares. Gold stocks, gold equities are still way off their highs, from a few years ago, from the 2011 peak. I mean, inflation adjusted, we're nowhere near an all-time high. Gold needs to go to, I think $2,200-$2,300 to start getting people excited again. And, if it rips to 2,500, I think we'll see the mother of all gold bull markets, sweep through the land in Canada, and people make a ton of money. And if the mining sector ever comes back to life, I'm talking about, this financing data and some of these numbers. If the mining space comes back, if gold and silver actually catch a real bid and go to new, significant new all-time highs and stay there, that's when you're going to see, Canada's venture market come alive and widespread wealth creation.
So I think that about wraps it up. Wishing everybody and your families a very Merry Christmas and Happy Holidays, and we'll see you in 2024.
Merry Christmas, everybody.